I'm going to go through how much your mortgage is going to increase by with the new interest rate rises by the Bank of England. Hi, this is Mosh, and I'm going to explain that if you're due a remortgage either this year or next year, which a lot of people are because they're coming to the end of the fixes, you're going to go on a much higher interest rates and how much that's going to cost you. So the biggest issue is currently the base rate for the Bank of England is 5%. Last time it was around this high was just before the 2008 financial crisis, and you can see it reached to a peak of 5.75% before crashing down and staying below 1% for a very long time. So people are not used to these incredibly high interest rates. And the reason why they're doing that is because the CPI recent was 8.7%. So inflation is not going down, it's persisting. And you can see it's the highest it's been in the last 10 years. I'm going to go through how much your mortgage is going to increase by from a loan to value of 60% all the way to 85% based on a 20-year term and using data from the biggest mortgage providers. So let's start with Lloyds Bank. So with Lloyds Bank, the highest interest rate on an 85% loan to value is 6.14%. And that's for a 2-year fix. Clearly, I mean, personally, I wouldn't go for a 5-year fix because interest rates will eventually have to come down. And the lowest rate for a 60% loan to value is 5.46% with Lloyds Bank. Now with HSBC, an 85% loan to value, the lowest that you'll find is for a 2-year fix is 5.44%. And with a 60% loan to value, the lowest you're going to find is 5.27% fixed for 2 years. I'm going to assume that you've got 20 years left and you started off your initial rate of 2% when you started your fixed mortgage. So this is for £100,000. Now the lowest loan to value 60% of a rate of 5.27%. So that would give you a monthly increase of £675 or a monthly increase of £169 per month. Now, the lowest rate with HSBC for a 85% loan to value was 5.44%. So that would give you a total of £685 or a monthly increase of £179 per month. With Lloyds, the highest was 6.14%. So that will give you a total of £725 a month or a monthly increase of £219. For £100,000 left on your remortgage. Next is a remortgage of £150,000, again 20 years, initial rate of 2%. The lowest rate with a 60% loan to value is 5.27% with HSBC. So that will give you a monthly total of £1,012 with an increase of £253 per month. An 85% loan to value with HSBC was 5.44%. So that will give you a monthly total of £1,027 or a monthly increase of £268 per month. And with Lloyds Bank, it was 6.14%. And that comes to £1,087 per month with a monthly increase of £328. Next, we come to a remortgage of £200,000 left with a 20-year term, initial rate of 2%. The lowest rate with a 60% loan to value comes to 5.27%. So monthly total of £1,350 or an increase per month of £338 per month. The 85% loan to value HSBC is 5.44%. Monthly total £1,369 with a monthly increase of £357 per month. With Lloyds Bank of an 85% loan to value, so of a rate of 6.14%, monthly total £1,449 or a monthly change of £437 per month. Next, we go to a remortgage of £250,000 left for a 20-year term, initial rate of 2%. This is with a 60% loan to value HSBC of 5.27%. So your monthly total comes to £1,687 with a monthly increase of £422 per month. HSBC's 85% loan to value of a rate of 5.44%, monthly total £1,711 or a monthly increase of £446 per month. And Lloyd's highest rate of 85% loan to value, 6.14%. That gives a monthly total £1,811 or a monthly change or increase of £546. A £300,000 remortgage, 20-year term, initial rate 2%. and your loan to value is 60%. HSBC's rate is 5.27%. So monthly total £2,025, or an increase of £507 per month. And 85% loan to value, monthly total £2,054, or a monthly increase of £536. And with Lloyds, it was 6.14% for its 85% loan to value. That gives a total of £2,174 per month, or an increase of £656 per month. Lastly, we're going to do £350,000 remortgage, 20-year term, initial rate 2%. This is for a 60% loan to value HSBC of 5.27%. So the monthly total comes to £2,362, of a monthly change of £591 per month. HSBC's 85% loan to value of a rate of 5.44%. So that gives us a monthly total £2,396, with a monthly change of £625 per month. And lastly, Lloyds, 85% loan to value of 6.14%. So that gives a monthly total £2,536 and a monthly increase of £765 per month. Now, this is not financial advice. Obviously, speak to your broker, speak to your bank about these interest rate rises. Personally, I think interest rates will keep going up until they induce a recession. They need a recession. They need job losses. They need businesses to go bankrupt. They need people to stop spending money before the interest rates start coming down. Otherwise, inflation is going to persist. That's how they bring about getting inflation down. Because if they keep on raising interest rates and inflation is not going down, then that is not working. So they'll keep doing it until basically they crash the economy. Personally, for me, I wouldn't go in a 5-year fix, because I think eventually once they've crashed the economy, that the interest rates will start falling again. 2-year, probably the best bet. But again, you can just carry on with the variable rate. But if you're staying on the variable rate, you can see it's 6.99%, which is a lot of money. And 6.99%, let's just put that in for our calculator on 350,000. That's what? £940 per month you're paying. And let's just quickly do the lowest end of 100,000. That's a monthly increase of £269. So almost a 50% increase on what you were originally paying. I hope this helped. And if you got any comments, leave it below. And I'll appreciate a like on this video.